Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Wednesday, the 13th of February. Not quite as eventful as yesterday, as stocks kind of gapped up on the open and really just hung around. Not a whole lot of movement across the board. Did see some earnings movers as we are grown accustomed to, but for the most part, a little bit of a flat type of a trading day going into the latter part of the week. Still have earnings on deck, notably Cisco coming out tonight and Coca-Cola coming out here tomorrow before the open. So still some pretty big companies coming out with earnings before it's all said and done. Earnings about wrapped up, but again, earnings season's about wrapped up. There's always somebody coming out with earnings, right? And welcome everybody. I hope everybody had a great day trading, a great day in and out of the market. Starting to snow here yet again in Utah. Winter is supposed to be over, but it is not, at least not to date. So as we look at the S&P 500, let's kind of start taking a look at our intraday action. Gapping up pretty nicely on the open. Looked like it might want to try to break and run, but it really spent the early part of the day establishing a little bit of overhead resistance at around 2760 before kind of giving up, selling off, and then drifting up. We did see some selling at the end of the day. Most of our last 15-minute candlesticks were some selling. I don't know that that's a huge deal. I would have liked to see it close, with some more buying from a bullish point of view. Didn't really change things overall technically, but something interesting worth noting. Definitely some selling to end the day here in the market. As we look at our daily chart, big news of note probably from a technical point of view is the S&P 500 closing above the 200-day moving average for the second day. Technically, it did it yesterday, but it was so darn close. I feel a little bit better with it closing a second day above that. Not a lot. We do have a little bit of intraday resistance that formed in the form of today's high. Nothing major, but something we can keep an eye on. Beyond that, not a whole lot of resistance until we get to the big one, in my opinion, at 2,800. That is a significant level of resistance in my mind, at least. I will remain overall bullish until we get there. I'll remain bullish when we get there, but I will definitely be thinking locking in profits, pulling up stop losses, hedging positions, whatever it might be. That was a major price point, right? That was definitely something happened there, and definitely something might happen there again. So we got a little ways to go between here and there, and not really a lot of reasons, technically speaking, not to get there in my mind. So I'll continue to look at this overall through a bullish lens, just another little bullish signal over here today in the S&P, but not a lot of conviction in today's candlestick. There's really no doubt about that. Maybe it just needed to take a break, right? Coming off of Friday's low, we had a pretty good run, right? Boring Monday, nice bounce Friday, really, nice gap and run yesterday. So maybe just need to take a little bit of a breather is all. Definitely not a strong candlestick, whatever the reasons are. NASDAQ bumped into that 200, and unlike the S&P that was able to kind of close right above it yesterday and build off of that here today, the NASDAQ was not. So we did kind of take out that previous swing high, but we were unable to close above that 200 period moving average. Again, is it the biggest bearish signal ever? No, I don't think it is. Would I feel better from a bullish point of view if we were able to close in the green above that? Yeah, I absolutely would. Definitely something worth keeping an eye on. But really, again, I still do not expect that to be a major form of resistance. I do believe, just like we talked about yesterday, these lows that we put in Friday, just another day for, in my opinion, to believe that those are the new support zones. If those break, that is going to be a shift in sentiment, in my opinion. I don't expect that to necessarily happen, but I do feel comfortable in saying, yeah, that is where you stop being, at least short-term bullish with the movement that we've seen off of those Friday lows. Keep an eye on that 200 period moving average. It's flat. I still don't think it's a huge deal. I still think there's some room to the upside in the NASDAQ, but would have liked to see it try to close above that 200 today. just not a lot of follow through off of a pretty strong open here today. And again, reasons are reasons, right? I can spout off why I think it is, but at the end of the day, it is what it is. That's why I always trust the price and not the talking. Actions speak louder than words, right? So at least in my mind, when it comes to just about everything, certainly when it comes to the stock market. Over in the Dow, very similar type of candle, but a clean break above resistance, closing up 0.46. So it was our biggest gainer here today. Nothing major by any stretch of the imagination. Once again, had that gap on the open, wasn't able to break out of those early highs, and kind of spent the rest of the day kind of churning a little bit of selling to close the day. We are approaching some resistance here in the form. And again, this is kind of going to be more of a zone, I think, than a number. I'm looking right in here at that 25.8 kind of is the general number I'll be keeping my first eye on. We're not too terribly far away from that at this point in time. So maybe part of it is we're getting close to some significant overhead resistance, right? If we think about this from a little bit of a longer term perspective, these were major tipping points in the market, right? And so maybe that's part of the indecision here today. The signals to go bearish aren't there, but there is some resistance that could easily scare some traders off. I would, at least it could scare me off. So over in the Russell, best looking candle here today in my mind. We did have a similar price action, but nowhere near the indecision in my mind in the Russell. But we are right at that 1550. I know we're not exactly there, but we're fighting at that 1550 old pivot, nice round number range. Definitely, it makes sense that is where it called it a day here today. But in all of these indexes, in my opinion, we're not seeing any new sell signals or anything like that. Maybe a little more indecision than would be ideal from a bullish point of view, but certainly nothing that says, this is the end. Still above everything, not breaking any support. I do believe, again, that those lows that we put in late last week are the new support levels to be looking at, where that shift in momentum can potentially take place. We're a ways away from that. I'm not expecting us to get there anytime soon, if at all, but I love when I know where, at least I think I know where it shouldn't go below. All right. So always make me feel better as I'm kind of working through things. So that's where we find ourselves here today on our indexes. We got a pretty exciting day yesterday and followed it up with kind of a clunker, but nothing really too dramatic. And good afternoon, Tanner. Good afternoon, everybody. Always great to see you guys. And it was one of those days between, I've been kind of busy and then it's snowing here. And so it seems like one of those days for me too, Tanner, where everything is just, I'm 2 minutes behind and then I'm 3 and then I'm 4. But the market goes on regardless, right? So great to see you. And hello, Whitney. Always great to see you guys. Thanks for joining me. It's a lot more fun to do this with friends than on my own. So keep an eye on 1550 on the rut. I know you guys are already watching it. We've seen that price action. It's a big round number. If we can cleanly break that, we do have a little more room to the upside. I do expect this to be a little bit of a fight. I do expect that this is going to, a much more intimidating potential level of resistance than things really we've seen since way back here in my mind. So we've kind of filled up the easy space. Now we're going to have to start dealing with some challenges over here in the Russell. As we move into our sectors, we carried on that momentum early. Again, pretty much everything gapped to the upside here this morning. We were making a run in the material sector at that resistance level, bonked our head right into it, and definitely sold off of it. So at least for today, traders have had enough in materials, at least enough of it not to try to buy more at resistance. No terrible surprise. It's been kind of in this choppy type of range. Really nice move yesterday. No two ways about that. So, a little bit of slowdown at resistance does make some sense. Beyond this resistance level, if we are able to break through it, I do like the upside. There's not a ton necessarily on the ETF, but there's still some room, not a lot of resistance. We will have a pretty reasonable challenge at $56 or thereabout. That's going to be this old resistance, this old support, the 200-day moving average. So that'll definitely be something worth keeping an eye on if we do take out this little short-term resistance that we're dealing with. But between, here and there, not really much price action historically. So should be a little bit of room to run in an area that does have a tendency to run this time of year to the upside from a seasonality perspective. So it's got my attention. let's see it break. That's always the kicker, right? It's easy to like you. It's hard to break resistance. Go Ask Energy, the energy ETF. Really strong day, for the most part here today. Over in energy, crude was up. Things are looking pretty good. Briefly, it was able to stick its head above that $65 mark on the intraday, but closed clearly below it. It's a tough fight. It's tough to break resistance. Sometimes we forget that, maybe. But it's hard to break support and resistance, especially levels that have had, significance in the past. So no terrible surprise that without really a lot of momentum being generated in the market, a lot of traders weren't willing to buy, hoping it was going to push through here today. We're knocking on the door. I mean, it's one of those things that, at least theoretically speaking, we could break as early as tomorrow. That wouldn't be we wouldn't have to go up very much to break. It's what we have to go through to break, right? We don't, we're kind of knocking on that door, putting up a pretty interesting fight. If we do break. I will absolutely be interested in this sector. If we do break, if you did take that pullback play, congratulations. I know some people did. I was not one of them, but that is okay. Do keep an eye on that 65. Again, this is put in a nice little range. We know the history at that 65. We know we're in for a little bit of a fight. Not to say we can't win, but it's a tough one. It's a tough one. Over in the financials, very similar in a lot of ways to energy, where we pushed up kind of above that old support zone on the intraday before kind of throwing in the towel and closing back below it, just giving us a little bit more information that, it is something that folks are watching. It's not just the crazy people here in the market recap, keeping an eye on this general price range on the financial sector right now. We have seen some nice movement off of Friday's lows, but a big part of it was everything, having such a strong day yesterday. Not a lot of great follow through here today, putting a little bit one of those gravestone doji type of candles here today. So not a particularly bullish candlestick. Makes sense in my mind, much like the energy sector does. These were major points, or we've got a lot of history, or both. At these prices, little bit of a fight. Still do like this area for potential breakout opportunities once we can take that out. I don't think we can say we've taken that out here today. We can say we put up a fight. We watched it fight for a week and a half. It did sell off some, but it really rallied nicely back into it. So I think it's still continuing to show overall willingness to try to break from the way that the chart looks to me. It just has not happened quite yet. It's not easy. Industrials faring about as good as anybody here today. Maybe energy had a better day percentage-wise, but we really just continued the nature of industrial stocks right now, right? They just go up now. That's just what industrials do, apparently. And today was no exception. One of these days they're not going to have a green candle, but those days do not happen very often right now. We continued to build off of yesterday's break. Not a lot of resistance. We've got some room to run into that 77 mark, which is some serious stuff that we'll want to be keeping an eye on as we approach it. But technically, really not much between here and there. May need some pullbacks to get there, but this is the industrial sector, and these days, never assume it's going to pull back is a good rule of thumb, because it does not seem too keen on doing that. But nice upward movement within the sector here today. Still have some room to go. So it's hard, in my opinion, it's hard not to like the industrial sector right now. And hey, Ilka, good to see you, my friend. I saw your picture of snow the other day. I was jealous, so it's snowing more. So just like the NASDAQ was unable to break above its 200-day moving average, saw the same thing over in the tech sector here today. Now, I just look at this as a potential profit-taking zone. If I bought into the pullback, and I know it really wasn't a textbook pullback, but theoretically speaking, we worked to resistance, we worked to a 200-day moving average, had a pretty good, 3-4 day run. It makes it easy to take some profits, at some resistance. So, you and me both, my friend. So I think I'm more used to it than you, from the sounds of it. Keep an eye on that. I don't really think this is anything major. It certainly is a kiss of the 200. We definitely were not able to break it here today. We were able to break the little swing level of resistance, though, showing a little bit of positivity. Again, not a great close on the candle. If we go in and look at it on an intraday, we're going to see that it really wasn't a great close. Nice gap on the open, much like the market, kind of hovered, thinking about breaking to the upside, threw in the towel, pulled back, and then drifted. Did see some reasonable selling the last half hour or so within this sector, closing near the lows of the day. That's how we got to the candlestick, of course, that we're on as we look at that daily chart. So didn't close particularly strong, makes sense, bumped its head into the 200, still above all the short-term averages. We keep an eye on those averages, right? Even though, I said many times flat averages don't scare me as much as rising or falling, I'm always looking at them because they're easy to see. I guess that's probably why, especially those long-term averages, I like them so much. Most people have a 200-day moving average on their chart, and it's a very easy thing to see for most of us. One of those things just you can't really miss even if you try. So, not a lot of follow through off of yesterday's movement, fighting through the 200. To break through that definitely would be a nice little bullish signal, a little more room to go, probably into the 72 general ballpark, but there's going to be little things that could be in the way here. But not a great close, no doubt about it. Not able to, and that's the thing, today we just really weren't able to build off of really good momentum yesterday. And you could look at it one of two ways. It's either not a good sign or it makes perfect sense. It needed a little bit of time to pause and catch its breath. Yesterday was a pretty big move, right? So we've seen no sell signals, in my opinion, at least. So I'm just looking at it as things just don't go straight up as much as I would like them to, at least if I'm a bull. So over in staples, we're able to close back up, above that trend line that we were, of course, broke through here yesterday. And that is definitely a good thing. Not a lot of conviction here. Now we have Coke, coming out with earnings, a big player in this space. So maybe something, they can have it impact one way or the other. Although, staples aren't traditionally crazy, one way or the other. Nice close above that. Not a lot of price action here today. Very indecisive day over in the staples sector. Should be interesting to see Coke's earnings, see what kind of impact. I don't expect it to be a dramatic impact on the overall sector. But if they come in solid, that might be enough to continue this momentum. So we will have to see. But once again, and for me at least, closing above this trend line is a signal that, I will interpret as bullish. I know not everybody looks at that trend line the same way that I do, and I do get that, but I can only speak for myself 100%. So that matters to me. I wouldn't mind seeing a little bit of a pullback develop in the days to come, but we will see if we get that. Utilities, pretty much the same deal, right? Nice little doji candle, little bit of back and forth movement, closing above, whether it's old trend line or the old resistance zone, closed above both of them here today. No real behind it, but that was just kind of the story of the day from a broad perspective in the market. You have a couple of these utility stocks that are coming out. AEE is one of them. They were a nice little break not too terribly long ago. They will be coming out before tomorrow's open as well. So definitely, although that is the wrong AEE. No, it isn't. AES. Maybe I'm thinking AES. All those utility companies, I get them confused. So yeah, AES. So there's that nice little break. They can move, certainly. But we do have some earnings in this space here coming up to close the week out. Technically, not a lot here has changed. We're still above the resistance. We still are closing above it, showing relative strength above our averages. Gone into a little bit of a sideways range here these last couple of days and been a little bit of a choppy range, not one of those nice orderly type of ranges that I always prefer to see. But a close above resistance is always a close above resistance, right? So no real reason in my mind to think any differently about utilities today than yesterday, at least for me. We were able to technically break and close above our resistance here in the healthcare sector today. Really a doji candle. But again, a break is a break, right? And so not a lot of follow through, but able to push through that resistance zone. Overall, I continue to like this space overall, and I will probably continue to say that as long as we hold this low that we put in last week, like pretty much like everything else, or at least most things, I feel comfortable calling that support now. And as long as we stay above that, I am comfortable with the healthcare sector overall. Going forward, a lot of room to the upside in my mind, not a lot of challenge before, until we run into it. And again, this was a pretty significant price point at this $93 mark. So I'll be keeping a close eye if we're able to work into it. But between here and there, really not a whole lot, and everything else still showing overall bullish signs. Yeah, and indecisive day to day. Would have liked to see a stronger candle, even not necessarily a bigger candle, but a stronger candle breaking through that resistance here today. But I guess beggars cannot be choosers. We were able to close, which I will interpret personally as a bullish signal over in the healthcare space. Discretionary, hilariously, they broke that resistance. We talked a lot about it. We looked at it again yesterday, and we were talking about it last week, testing it 3 times. We took that out here today. And, the big problem with this ETF right now, these stocks are very diverged. Some of them look great. Some of them look terrible. You had Urban, break down, hit a new 52-week low today. But you've got, Dollar General threatening to break out. And so it's a very mixed space when you look at, the individual components. But on the ETF, it's the toughest part with the ETF is you break something, there's always something right above us, right? And it wasn't much, but we filled up what we had here today. So we're going to have to deal with a little bit of resistance. Some pretty interesting things happened here, right? It was a little bit of bearish retracement. It was a major turnaround point, just like the overall market late last year. Should be an interesting battle. Beyond that, not a lot till 112. So I would expect this resistance to put up a bit of a fight, but beyond that resistance, probably a pretty clear path, although it's, at least if I'm trying to trade this ETF, probably difficult to do, but not a lot of resistance until that 112 marker. Beyond that, and this has been an interesting one. We've kind of talked about it together. There's just been so many little challenges around, every step of the way. And it's not necessarily been pretty, and it's not necessarily been easy if you're trying to trade this ETF, but it's won, every fight. It's yet to fail. And so overall, I still continue to believe in it, in this sector. I clearly don't like it as much as other areas like industrials, healthcare, tech, even materials, energy break, not going to be my favorite place probably until it breaks out of 112, at which point in time I'll probably really like it. But, still lots of little overhead filling up some space here today. A lot of, mixed, this is really a mixed bag. You've got some really interesting looking bulls and some potentially interesting looking bears in that sector right now, no doubt. Over in real estate, it's more of the same. It's just such a strong area, but it's so overextended that it's just one of those things that none of us want to buy it, but none of us dare sell it, right? So anytime it dips down into anything, once again, testing that 9 EMA here today, buyers are coming right back into it. And so it's just having that fight. Sooner or later, one of two things is going to happen. We are either going to push through and work up to that $35 mark, that resistance zone, or we're going to need a little bit more of a pullback. We're not going to go sideways here forever, I don't think, at least. But right now, we are, and I think it's a testament to how, strong this sector has been. At resistance, really extended, pretty much a textbook V-shaped recovery, plenty of reason for people to take profits. And yet here we are now 2 weeks hanging around this resistance zone and really haven't seen any significant profit taking. So clearly bulls are still very interested in even little pullbacks in the real estate field right now. No reason to think that's going to stop. We do keep testing that 9. It's starting to flatten out. It can be a little bit of a momentum gauge. But until we close below that 9 at the very least, I will not expect a pullback. I'll expect more of the same until we decide which way we want to break. And our friends in communication services, not much of a day in the market, not much of a day in the communication services. Now, Activision Blizzard, of course, did have their earnings. I wasn't able to catch the halftime report today. I'm sure the fellas talked about it. Not a great report, in my opinion. Doing a little bit of restructuring and kind of it looks going through their earnings. I don't go as deep into every earnings as I did Activision Blizzard's because I'm a long-term customer. I've been playing their game since I was 20 years old. So more than half my life now. So I'm a little interested in those games and what they're doing. And it really sounds like, to me at least, it's going to be a bit of a transition type of year. They did lay off, quite a few employees, some 8% of their workforce. They weren't typically the developer type employees. They were the community manager type employees that moderate the forums and stuff like that. And they're planning, it sounds like, to reallocate more resources into developers for their flagship games like World of Warcraft and Diablo, Call of Duty, things like that. So it sounds like, bigger picture, it's not necessarily a bad thing, although I do always never like to hear about layoffs. It doesn't sound from a business perspective that it's necessarily a bad thing, in my opinion, in the bigger sense, but it does really give me the feel that this might not be their greatest year. They might be kind of lowering the bar, if you will, on the expectations, is kind of my read on it. Certainly they had a good day here today. They initially gapped a little down on the open, and, because they really didn't do very well on the earnings. Revenue was a miss, much like the other gaming companies. But I guess, traders don't care too much if people get fired. They were looking at it as a good thing going forward. So at least today they were. That's going to be an interesting one to follow. I would expect some volatility to remain in that area for the time being, personally. But that is just my take on it. They certainly didn't do the ETF any favors today. That's for sure. Really not much to say here. Not a great candle, much like other areas. Basically it was either dojis or little, reverse hammer type gravestone looking candles here today. But technically still sound in my mind, whether we're looking at the old resistance level, this, the low from Friday, which I do think can be our primary level of support, which just so happens to line up nicely with our previous resistance zone. So there still is room. Again, this area is not one of those that I think of the same as energy or financials or most of the other sectors, but overall, we still maintain some pretty good strength here. Just, it's not, you would think, and again, who knows, right? But for so long, it was struggling, and it finally breaks out and really just have a hard time generating a ton of momentum. Maybe we need to get a break here. Probably a pretty nice little signal if and when we get that, at least on a chart that looks like this. I'll still be looking individually versus collectively at this grouping myself. So one of those days in the market, if you, didn't really probably change anything. I don't think we're seeing any new sell signals. If you want to be picky, most of these candles don't look great. There's a lot more candles, on the different sectors and indexes that, really fail to intraday resistance and close closer to or at the lows of the day, but didn't take out really any significant support. Still above our, our short-term moving averages, which in my opinion are really good gauges for short-term momentum. So to me, it seems more like a pause type of a day than a something's changing type of a day. As we take a look at our old friend, the VIX, really quick, not much to say here that we haven't said, several times. I'm not a huge VIX guy, as you guys know. But I'm not afraid to look at it. But again, the market is relatively speaking calm right now, right? Traders seem to feel like they've got a good handle on things. So volatility index is probably going to be looking like that until that changes. Over in the dollar, continuing to go back and forth within this range. Yesterday really sold off of that 97. Today popped off of the low and closed back above that 97, right at the high point from yesterday. Interestingly enough, maybe I should go into a shorter time frame, probably a little easier to see that here. But kind of closing right at the high point of yesterday's high on its candle. A break beyond that, probably should expect more, more of the same. If we are able to carry this momentum from today into tomorrow, take out that little intraday high from yesterday and today as well. Not a lot of resistance. We've seen it before. Not a lot of resistance. Until we work up into these 97.50, 97.60 highs. So I'm not ready to say it's happening just yet. Kind of break that intraday resistance first, but certainly overall continue to see bullish signals over there within the longer term sideways range. Now above this is a pretty significant break in my opinion. So it's going to be interesting to see if and when we get to that price point. We were showing a lot of strength last time we got there, and then, we saw some pretty good turnover for a while. But really nice bounce back day today over in the dollar. In our metals, it seems like one of those things that everybody wants to be very excited and with gold, and I understand. I think a lot of us here do, but it's just not quite ready. Anytime it really tries to get a shallow pullback, just not able to keep that momentum, a little bit of an intraday break, not able to keep that momentum, hasn't done anything technically wrong. And at the very least, I think you have to say above 13 is still technically to the bullish side right now, but just not ready to have that pop, at least not today. it tried. I mean, you can see with the, with the candle that looks like this, at some point in time, this was a big green candle breaking those highs from the last couple of days. And we just were not able to keep that momentum going into the rest of the day. Quite a bit of selling throughout much of the day, as you can kind of see here. So it's just not done anything wrong by any stretch of the imaginations. And in my mind, above 13 is clearly a bull zone. And that has not changed. And I don't really see a scenario where it does, at least in this general price tag right now. But just not quite ready to give, that entry back in. We'll get it. If you're in, I don't think anything's changed today. I really don't. I think it's more of the same, just not quite ready to come out of that range. Our friends in silver, very interestingly, we talked about that little, week-long floor that they had developed over the last, week, right? On that intraday chart. And when that floor gave out here, second half of the day, we really saw quite a bit of selling. That was it wasn't very long term, but we really tested it day in and day out for the most part. So when that floor gave out, it becomes a pretty easy place, to put a stop loss if you're trading on the intraday or what have you. As long as we are holding this low, I am fine with it. Obviously, I wouldn't run off and buy it today personally, but I'll still be looking at it from a bullish point of view as long as we hold this low. This is just a deeper pullback than maybe folks thought that they were going to get. I will be keeping an eye on this right now from a bullish point of view. I do think you want to be careful. We've seen a little bit of flattening out on our 20. We've seen our 9 EMA stop moving up, go flat, and now start pushing to the downside. Still is above the 20-day moving average. So we haven't had that crossover signal, but that theoretically could probably happen as early as tomorrow. I think if we're looking at it, a pullback opportunity probably isn't tomorrow, in my opinion, at least. Maybe I'm wrong, but I can't see a scenario where I would buy silver tomorrow, really, no matter what it does. Working back into the 50 might be an interesting price. As long as we hold this support, I am comfortable looking at it from a bullish point of view, but I now expect a little more of a pullback, at least as long as we are below that little floor. Now, if we break back above that little floor, maybe we'll get those confirmation signals from a pullback point of view. But right now, that little floor that built, I think we can look at our short-term resistance level personally. Over in Natty Gas, definitely some selling here today. It's been an interesting week, not a productive week, at least for me in natural gas, but we gapped up, ran into the 9 on Monday, got pushed down, ran into the 9 yesterday and called it a day. And then today just really saw quite a bit of selling, working closer and closer to those lows from last week, which of course are going to be our short-term support level. Beyond that, probably no reason to suspect from a technical point of view. Now, natural gas has been a little wild lately, so that can definitely matter. But technically, no reason, in my opinion, if we do take out that little intraday low, that we're not going to come test 250. I expect that to happen if we do take out that low. There's me drawing lines terribly again. Never going to get good at it, no matter how much I try. So more selling here today, testing a little bit of intraday support. Not a lot below us until 250, which there is quite a bit there at 250, as we've talked about before. If you're looking at it from a bullish point of view, I don't understand how, but if you are, at least you can now say, hey, kind of gone into this range. If we break that high for Monday, maybe there's a breakout. So I don't think I'd feel that way, but I think that would be the first place where I could be thinking like that. If we actually take out that high for Monday, we have technically made a higher high, right? So I don't expect that to happen tomorrow, but you never know. You never know. And I wouldn't want to trade it if it did. So those of you who did, and I know some folks were very interested in the pullback in the crude oil. We got a little bit of a hammer candlestick with Doji Friday, hammer Monday, upward movement Tuesday, and carried that movement on here today, closing almost at $54, getting closer and closer to our level of resistance. Probably still have some room on the upside before we challenge that. And not a lot of room, but there is a little bit more room between here and that resistance zone. For me, again, hindsight's 2020. I shoulda. I understood why people were doing it, but I wasn't one of them. And in hindsight, I wish I was, because I'm not a crazy person in hindsight, at least. And so for me, the breakout of this high, still a better signal. or at least this new signal to be looking for. Very difficult in my mind to buy here, because if resistance holds, you basically can't win, right? So if you're looking at it from a bullish point of view and not here, for me at least, I think the break is the signal. And you may or may not agree, but have to appreciate the last 2 days of upward movement working into that resistance zone. Overall, still in the same general zone, but definitely rewarding folks who are willing to play into that pullback here these last couple of days. So, ladies and gentlemen, that is where we find ourselves after a fairly uneventful day in the market. You know, I mean, really not a whole lot changed. This is often the case, right? The market's a giant story. So most of the time, today's just a continuation of yesterday. I guess today's story is, you know, a little more of the same with a lot less conviction, right? So, you know, most things, you know, built a little bit off of what they did yesterday, but nowhere near the same level of conviction across the board. No doubt about that. So overall, I don't really think your opinion has probably changed in the market. Just you know, based off of today's price action, but at least mine. Maybe yours has, but I don't really see any great reasons why you would, you know, abruptly change from where you were to where you might be today if it's that big of a difference. But again, that's just me. With that, ladies and gentlemen, as always, thank you so much for joining me. It's always great to see you guys hang around with you as we go through our daily routine. If you are new around here, be sure to subscribe to the channel and hit that notification bell, and be sure to follow us over at Tackle Trading on Twitter as well. And you can always find me on Twitter as well at FrankMartin23 if you want to pop in and say hello, or for me to get you added to our Team Tackle list, or both, or whatever it might be. Always happy to see you guys over there as well. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that we're on the right track, and to let YouTube know that you think we're on the right track. That's always helpful in their algorithm as well. So with that, ladies and gentlemen, get the heck out of here. Go enjoy your snow day if you have one, or the lack of snow day if you don't. And I'm jealous. I'm tired of snow, but it's not tired of me yet from the sounds of things. But have a great afternoon. We'll pick up same time and channel here tomorrow. So with that, guys, get out of here. Happy trading, and I'll see you tomorrow. Thanks, everybody.